For many people, the first $100,000 is the hardest milestone to achieve, yet it marks a powerful turning point in personal wealth building. This figure is more than just a number in a bank account. It represents discipline, consistency, and the ability to create a foundation strong enough to build upon. Reaching $100,000 proves that saving, investing, and resisting unnecessary financial temptations are possible, and once this level is reached, the journey begins to change dramatically. The climb from $100,000 to $1 million is not a simple straight line. It is exponential. With capital already working in your favor, the pace of growth accelerates through compounding, higher return investments, and scalable opportunities. This is where the concept of the wealth acceleration point emerges. It's the stage when the focus shifts from just accumulation to multiplication, when strategies and mindset evolve to unlock exponential growth and move closer to financial freedom. The journey to the first $100,000 is often described as the toughest stage of wealth building because it requires overcoming both psychological and financial barriers. At this stage, most people are still dealing with limited income, high living expenses, and perhaps even debt from education or early career struggles. Saving feels painfully slow because every dollar matters, and the growth of investments is almost invisible in the beginning. To reach $100,000, people often need to make sacrifices that test patience and discipline. Living frugally, saying no to unnecessary luxuries, budgeting strictly, and staying consistent even when progress feels small. Building those first income streams, whether from a job, side hustle, or early investments, requires relentless effort and a refusal to give up. Yet this milestone is far more than money. It is proof of financial literacy, commitment, and the ability to manage delayed gratification. Once the $100,000 mark is achieved, something profound shifts. Capital begins working harder than the individual, and compounding becomes noticeable. Instead of crawling forward dollar by dollar, smart strategies like investing, reinvesting returns, and diversifying income sources allow wealth to grow at a faster, almost accelerating pace, making the road from $100,000 to $1 million dramatically smoother. Once the first $100,000 has been built, the next crucial step is adopting the acceleration mindset. This shift is about moving beyond a pure saving mentality into a growth-focused approach where money is no longer just stored, but actively multiplied. At the beginning, extreme caution and strict frugality are necessary, but after establishing a strong financial base, risk tolerance naturally expands. With a safety net in place, individuals can afford to pursue opportunities that carry higher potential returns, investing in businesses, growth stocks, or real estate that may have been too intimidating before. This transition also requires breaking free from a scarcity mindset, where every dollar is guarded, and stepping into abundance thinking, where money is viewed as a tool for creating more opportunities. People who adopt this mindset see capital as a resource that should flow, grow, and create leverage, not sit idle. Long-term vision becomes essential here, as chasing quick wins or short-term profits often leads to setbacks, while consistent, strategic decisions compound into exponential results. The acceleration mindset means thinking bigger, acting strategically, and focusing on scalable opportunities, setting the stage for wealth to grow at a pace far beyond what careful saving alone could ever achieve. Compounding is often called the eighth wonder of the world, and once someone crosses $100,000, its power becomes truly visible. Unlike the slow grind of building that first six figures, money now starts working harder than the individual. For example, if $100,000 is invested with a 15% annual return, it can grow to over $400,000 in just a decade, and crossing $1 million becomes a realistic possibility within a slightly longer horizon. Even with a more conservative 6% return, that same capital doubles in about 12 years, showing that consistency matters as much as high returns. The secret lies not in timing the market, but in staying invested long enough for compounding to work its magic. Countless stories exist of individuals who didn't chase fads or risky trades, but instead allowed steady investments to multiply quietly over time, proving that patience and consistency are the real accelerators of wealth. Once the $100,000 milestone is reached, the next leap requires more than saving and investing modestly. It demands a deliberate focus on accelerating income. Relying solely on a salary creates limitations, as there are only so many hours in a day and only so much room for incremental raises. The wealth acceleration point calls for scaling multiple income sources that allow money to grow independently of time. Entrepreneurship is one of the most powerful levers, as building a scalable business can multiply returns far faster than traditional employment. Strategic investments in stocks, ETFs, and real estate provide another avenue, creating both growth and cash flow. Developing high-income skills such as coding, consulting, sales, or digital marketing opens doors to higher-paying opportunities and flexible, project-based income. Passive streams, royalties, dividends, or rental properties further amplify wealth by providing ongoing returns without constant effort. The magic lies in combining these layers. For example, someone with $100,000 in savings might start a consulting side business, invest part of their capital in dividend-paying stocks, and purchase a rental property with financing. Over a few years, these combined sources could grow wealth to $500,000 far faster than saving alone. The acceleration effect comes from diversifying income pathways, where each stream contributes momentum, making financial progress exponential rather than linear. By stacking multiple sources, an individual is no longer tied to a single paycheck, but instead creates a self-sustaining wealth engine capable of propelling them closer to the million-dollar milestone. Reaching $1 million requires putting capital to work in vehicles that not only preserve wealth but also accelerate growth. The stock market remains one of the most accessible and proven routes. Index funds provide steady, long-term growth with minimal effort, while growth stocks offer higher upside potential for those willing to accept more volatility. Dividend reinvestment plans add another dimension, steadily compounding income back into ownership. Real estate, on the other hand, provides both appreciation and cash flow. Rental properties can generate monthly income, while leveraging mortgages allows investors to control larger assets with relatively less capital, amplifying returns over time. Business ownership is another powerful accelerator. Whether investing equity in startups or scaling a small business, the growth potential can dwarf traditional investment returns, though the risks are equally higher. Alternative assets like cryptocurrency, angel investing, or intellectual property can also offer massive upside, but they demand careful research, timing, and a tolerance for volatility. Each vehicle carries unique pros and cons. Stocks are liquid but can be volatile, real estate offers tangible security but requires management, businesses can create massive wealth but also fail, and alternatives can skyrocket or collapse quickly. The key is diversification. A well-balanced portfolio spreads risk while ensuring no single investment dictates long-term success. Combining traditional vehicles with calculated exposure to higher-risk opportunities creates a dynamic strategy. This balance prevents stagnation, protects against downturns, and ensures capital continues to grow steadily toward the $1 million mark. Wealth building beyond $100,000 is not just about making bold moves but also about creating systems that keep progress steady and predictable. Automation plays a crucial role here. By setting up recurring deposits into investment accounts or using dollar-cost averaging, money is consistently funneled toward growth without relying on daily decision-making. Alongside this, regularly tracking net worth provides a clear picture of progress, helping to identify weak spots and celebrate milestones that reinforce momentum. However, one of the biggest silent threats is lifestyle creep, the tendency to spend more as income rises. Successful wealth builders consciously limit unnecessary upgrades, choosing instead to reinvest the surplus into assets that generate future returns. At this stage, discipline and consistency matter more than grand gestures. Small, repeated actions, automated contributions, mindful spending, and regular reviews quietly accelerate wealth, ensuring that the path to $1 million is not left to chance but guided by intentional, repeatable habits. Many people who reach the six-figure stage stumble before hitting $1 million because they fall into common financial traps. One of the biggest is lifestyle inflation, upgrading homes, cars, and vacations too quickly, which consumes the very capital meant for growth. Another danger is overleverage, particularly in real estate or high-risk investments, where borrowing too aggressively can lead to devastating losses if markets turn. A lack of diversification also leaves wealth vulnerable. Putting everything into a single stock, property, or business can wipe out years of progress in one downturn. Perhaps the most tempting yet damaging pitfall is chasing get-rich-quick schemes at the acceleration stage. With more money at hand, flashy opportunities and promises of overnight success become harder to resist. The truth is that sustainable wealth requires patience, balance, and discipline. Avoiding these traps ensures momentum is preserved, protecting the journey toward the million-dollar milestone. Many people manage to grow from $100,000 to several hundred thousand, but progress often stalls before the $500,000 mark. This plateau happens because strategies that worked early, frugality, simple saving, or cautious investing, lose their effectiveness as wealth grows. To break past this middle stage, a strategic shift is required, moving from effort-driven gains to scalable, leveraged growth. At this point, hard work alone is not enough. The focus must turn to systems, assets, and opportunities that multiply wealth independently of personal labor. Scalability comes from investments that compound faster, businesses that expand beyond the owner's time, and networks that open doors to higher-value deals. Capital leverage, using existing wealth to acquire appreciating assets or invest in ventures, becomes the key to acceleration. The wealth acceleration point lies in embracing exponential growth, where networking, compounding, and smart risk-taking converge to push momentum beyond $500,000 and set the path directly toward $1 million. Crossing the $1 million mark brings more than just financial security. It opens the door to an entirely new set of opportunities and perspectives. At this stage, financial independence becomes a real possibility, with investments capable of covering living expenses and reducing dependence on active income. Having more capital also grants access to higher yield opportunities that are often unavailable to smaller investors, such as private equity, exclusive real estate deals, or premium financial instruments. Beyond the financial benefits, there are noticeable social and psychological shifts. New networks form, as peers with similar success offer fresh perspectives, ideas, and partnerships that can lead to even greater growth. Yet, perhaps the most important lesson at this stage is humility. Many who achieve $1 million risk overconfidence, but sustainable wealth depends on maintaining the same habits, discipline, diversification, and long-term vision that built it in the first place, ensuring that success lasts for decades to come. Reaching $1 million is often celebrated as the ultimate milestone, but in reality, it is not the finish line. It is the true beginning of financial freedom. At this point, the foundation has been built, and the focus shifts toward protecting, multiplying, and enjoying wealth responsibly. The journey to this stage highlights the key forces behind acceleration: the right mindset, the power of compounding, the scaling of income streams, and the discipline to stay consistent. Once the acceleration point is reached, wealth grows faster than personal effort, proving that smart systems, not endless hustle, drive lasting financial success.